18,000 is something that we witnessed as far as the Nifty goes this week, but from there we retraced back and we started talking about some bit of resistance around that 18,000 mark, with 17,600 being an important floor level. Now with earnings coming back to the forefront and the fact that the coming week is going to be a truncated one, do you think that we'll continue to hover around the current range, or do you see a big upside coming into the markets?
Hi. See, the overall range for the market is what you have already defined. It's between 18,000 level to 17,600, and we have been hovering around that level. I think the coming week we have only 3 trading sessions, and in that week, crossing 18,000 is not going to be an easy task, given the fact that there has been a huge call open interest build-up still existing there. So we might continue to follow the strategy of buy on dips and sell on rise in this range bound market. So I would suggest that if there is any kind of a dip from here, maybe somewhere around 17,750, create a long position, keeping a stop loss of 17,600, and then playing it for a move towards 18,000, 18,050 odd level. So that should be the strategy. Breaking out above 18,100 over in the coming week is looking little tricky, because one very interesting aspect is that after the merger announcement of HDFC Twins, we can clearly see the stocks have returned back to the levels where the news was announced. And this time on the forefront is not the HDFC Twins, but the FMCG sector and the stock like ITC, because of which the index is moving higher. So that's a positive, but at the same time, it's concerning because HDFC Twins, despite of such a big news, did not perform well. So I think we will consolidate, the sector will rotate, the stocks will change, and one can buy on dips for the target of 18,050 on the upside. See, if you look at the overall IT sector and if you look at what has happened in this sector, is that this sector started leading the entire trend on the upside. And since this past 3 days, we can clearly see this sector had been under pressure. So overall, I think it will consolidate. This is not the time where I think there will be a stellar results going to be announced by TCS or Infosys. I think they will consolidate in a very broad range. If I have to still pick up something, then I might end up pick up something from the mid cap or the small cap space, something like eClerx, which is a little out from the large cap space and is looking much more attractive than possibly a TCS. We can clearly see post the buyback announcement that TCS happened, there was a huge move on the downside, then a recovery back. So I think it's time that TCS Infosys both will consolidate. For TCS, I think the level to be watching on the upside is going to be 3,800 from where we started seeing the correction. And on the downside, the range is going to be around 3,600. So this is the broad range in which I think TCS can possibly move. Only if it crosses above that 3,800 mark, we can start seeing the momentum picking up. So my pick is going to be eClerx in the IT space, and I think both Infosys and TCS will consolidate in the coming week.
Is going to be seeing a bit of consolidation, and a few of these FMCG names are making a comeback, the likes of ITC, etc. Given the sector churn, what are your top bets for the coming week or even a bit longer term?
See, in the coming week, I would possibly look at, first of all, the auto sector, because after a long time, some kind of attraction in the auto space, and Mahindra & Mahindra looks like giving a very good move on the upside. The stock has shown a very strong bullish candle formation, managed to do outperform along with a huge volume, so that's a plus. So Mahindra & Mahindra, one can create long positions here, keeping a stop loss of 827 for the target of possibly 920 or higher. And the next stock is from the mid-cap, small-cap space is Sharda Crop Cap. We can clearly see this stock has shown a huge run-up and consolidated, and now again it is getting ready for the third wave on the upside. So Sharda Crop Cap can give exorbitant returns from here on. One can create long positions, keeping a stop loss of 680 for the target of 755.
Okay, Ashish, thank you so much for those talk.
Yes, sure, of course. See, RBL Bank, if you're talking about RBL Bank, I think there had been a very sharp correction in RBL Bank today. It went from 140 levels to around 128. That's a sharp correction. So I'll not bet on RBL Bank at this stage for sure. Escorts again has shown a dip on the downside. I think it's quoting somewhere around 1610 if I'm not mistaken. But Tata Power, if you look at all of these stocks and compare that with Tata Power, it's exactly the opposite. We have seen a very strong breakout on Tata Power. It managed to cross that 260 mark just 2 or 3 days back. sustaining around 278 levels, I think this is an opportunity to enter into this stock after a months-long consolidation. So it has been moving in a triangle pattern since around 6-7 months and given a very big breakout on the upside. So Tata Power, I think, should cross 300 very soon, and on the downside 260 is going to be an important support. So Tata Power is my top pick out of these three.
Okay, Ashish, so those are the takes coming in when it comes to the likes of Tata Power as well as RBL Bank. But Ajay, we discussed about what we